Stop counting the days lost in the rhythm.
Brent crude futures saw a slight decline on Friday, continuing the losses from the previous session. Traders are speculating on whether OPEC Plus will reach an agreement on further production cuts. At 4 o'clock GMT, Brent crude futures dropped by 6 cents, or 0.07%, to $81.36, after a 0.7% decrease in the previous session. U.S. West Texas Intermediate crude also slid by 66 cents, or 0.86%, to $76.44. However, there was no settlement for WTI on Thursday due to a U.S. public holiday. Despite the recent decline, both contracts are expected to record their first weekly rise in 5 weeks. This is due to the anticipation that OPEC Plus, led by Saudi Arabia, will reduce supply to balance the markets until 2024. OPEC Plus surprised the market by announcing a 4-day postponement of their ministerial meeting to November 30th. This delay was caused by difficulties in reaching a consensus on production levels. Market analyst Tony Sycamore believes that an extension of existing cuts is the most likely outcome. The surprise delay initially caused Brent futures to drop by up to 4% and WTI by up to 5% during Wednesday's trading. Trading remained subdued due to the Thanksgiving holiday in the U.S. The Chinese outlook appears stronger in the near term, which is supporting market sentiment. Analyst Tina Tang suggests that recent Chinese data and aid to the struggling property sector could have a positive impact on the oil market. Chinese stocks rose on Thursday as expectations grew that China would provide more stimulus to the property sector. However, gains may be limited by higher U.S. crude stockpiles and poor refining margins, leading to weaker crude demand from U.S. refineries. ANZ analysts noted that fundamental developments have been bearish, with rising U.S. oil inventories. The longer-term outlook for China is lukewarm, with analysts predicting a potential weakening of oil demand growth to around 4% in the first half of 2024. This is due to the impact of the country's property sector crunch on diesel use. On the other hand, non-OPEC production growth is expected to remain strong, with Brazilian state energy firm Petrobras planning to invest $102 billion over the next 5 years to increase output. Overall, the oil market is experiencing fluctuations as traders await the outcome of the OPEC Plus meeting and assess various market factors.